I always love talking to you because you think so big picture and you really try to be a student of the world, but we're going to start specific. Stripe is basically the financial infrastructure that sort of quietly underpins millions of businesses around the world. What microeconomic signals are you seeing that maybe the macro is missing?
Yeah, so we definitely watch this stuff like a hawk, where we're always looking for the next recession around a corner. You know, they talk about markets climbing a wall of worry, and that's definitely how we feel, where we're worrying as we watch things. But I will say right now, from everything we see, on both the consumer side and the business side, the wallets are open. You know, spend is healthy. There's a sense of optimism. And especially on the B2B side of things, we see a lot of spend on the AI tools and AI products and services. And I don't know, people like to expend a lot of hot air on, you know, is AI a bubble and all this kind of stuff. The thing we see is everyone's pretty happy with what they're buying. You know, no one is saying, I did a lot of AI enablement of customer service, but you know what? I'm going back to doing it the old-fashioned way. Like, 0 people are saying that. And so we just see a lot of optimism in the business climate.
So you've been investing a lot in AI and e-commerce. And obviously, brick and mortar went e-commerce. Now e-commerce is going agentic, which means more shopping is happening inside chat, or will. What is this going to mean for the economy? Are we all going to spend a lot more? Or will the explosion not be quite the same?
Again, I think the level of spend tends to be dominated by the macroeconomic factors and how consumers are feeling. And again, as far as we can tell right now, consumer spend is holding up pretty healthily. I think what agentic commerce will do is change the nature of spending. And so, you know, what's really going on, you all have probably seen it, is, you know, we just launched in October with OpenAI buying directly within ChatGPT. And that was a very natural evolution for them because you all have probably had the experience of you know, doing product research within an AI app. It works really well. And it turns out that then going and filling out a whole bunch of web pages and clicking through 7 different screens and where do I put my wallet and everything like that is not a conversion optimizing outcome. And so instead, what you know, first OpenAI with ChatGPT and many of the other AI applications are doing are making it so that the purchase that you know, the product that you discovered directly within a back and forth with ChatGPT, you can then go convert directly there. I think what will then happen is it's a very interesting force that changes the nature of distribution, where you know, previously you might have gone to an aggregator site to find something, you might have done a search or something like that. Now there's a different discovery engine. You can have many more targeted conversational searches. Like, you know, you're looking for furniture and you're saying, okay, I want something that has kind of this feeling, and also, by the way, it should have these dimensions, fits within this space, and these are the, you know, manufacturers I like already. Like, none of that is stuff you can do with existing keyword-based search, and you're going to see the conversions based on that. And so we think it could be quite a democratizing force because you could lead to discovery of lesser-known brands.
Now, some merchants are scared of getting sort of cut out of the equations. What kind of conversations are you having about that?
I think if your only value prop is aggregation and discovery within the current paradigms, you're going to have a lot of questions to answer. But if you sell based on the value of the brand and the product, and people have very strong brand affinity, that brand affinity is going to exist regardless of whether people go to your website or whether they, you know, buy it agentically or something like that. Or, you know, Amazon has invested for decades in their logistics and fulfillment footprint. And so they have, you know, phenomenal advantages here to be able to get the product to you very quickly for a low price. And so I think the discovery and aggregation advantages are going to change, but many businesses are differentiating based on different axes.
We've been talking a lot about sovereign AI and sort of the return of digital borders, or a desire, at least, for digital borders. Is there such a thing as sovereign payments anymore?
Yes. So this is actually a trend that has gone not widely remarked upon because you know, things like AI get much more airtime. But basically, over the past 10 years, many countries have started saying, we want to be more involved in our digital payments infrastructure, and we want to potentially provide that or have that run through our systems. And so many people point to what the Indian government did with, first Aadhaar and then UPI, the government-run payment system, as one of the initial systems there, where it is a very well-designed, low-cost payment system that is now extremely widely used throughout India. What then happened is many other countries saw what had happened in India and said, hey, that's a great idea, we should do that. And so Brazil rolled out Pix, and it was launched in 2019. It is now completely ubiquitous. The Pix network does, on average, 2 transactions per Brazilian per day. It has displaced not just other forms of digital payment, but huge amounts of cash. And we could go through different countries. And so what this has then meant for Stripe and businesses running on Stripe is that our businesses, an Amazon or an OpenAI or someone who's using Stripe to accept payments, they don't want to think about all this stuff. They don't want to, their eyes would, glaze over if we were talking about all these payment differences. They just want to be able to sell their products and offer them in all the countries where people are. And we notice that these AI companies especially are going global much faster than the prior generation of, say, e-commerce or SaaS companies. And so what Stripe has ended up doing for these businesses is acting as the universal Babelfish layer, the translator that can make any customer able to turn up and use their method of payment, which may be a new sovereign method of payment with this product.
So if an AI agent makes a payment, does it belong to any sovereign anymore, or does it even?
Well, now, I'm just talking about customer payments. You're now getting into agentic and kind of machine-to-machine payments, which we are not seeing a huge amount of yet. But that is the really interesting thing coming forward, we think, which is maybe, everyone's talking about agentic coding and the fact that, there's a huge amount of Twitter hype around Claude code and things like this where people are seeing incredible results. But as your Claude code instance is going and building something for you, you probably want it to not just be able to kind of write code and execute inside a virtual machine. You probably want it to be able to go use third-party services. And so you need to give your Claude code a credit card or some way to go spend money in the broader world. And so we're actually building a lot of products for agentic and machine-to-machine payments. And we actually also just incubated a blockchain for very scalable payments, which we think a lot of the utility will be for these kind of high throughput machine-to-machine use cases.
You've been really vocal about stablecoins. What do you see as the best use case for stablecoins in e-commerce? Is it microtransactions? Is it new types of transactions in agentic commerce that we just don't understand yet, but will come?
So we think stablecoins will follow a bit of an arc. Right now, we are already seeing a lot of stablecoin utility, but basically, a lot of the utility that we're seeing has some kind of cross-border component. Because if you're in the US, things kind of work fine, from a domestic point of view. If you're in Europe, similarly, there's low-cost bank transfers. It works well enough. It's not perfect. Whereas, if you are a multinational company looking to pay out people all around the world, including in a lot of emerging markets, there are no good solutions for that today. They're high cost, they're very slow, and there actually just isn't connectivity in a lot of these markets. And so we're seeing a lot of product market fit, and we made 2 acquisitions in crypto recently, Bridge and Privy, and we've had a lot of success with crypto orchestration, where basically people are coming to us because they want to, be able to pay out money around the world, or they want to be able to, build functionality where you can hold dollar balances within your app or something like that. And we're, again, starting to see these successes. One of my favorite of our customers is a company called Felix Pago. They're doing remittances, but it's remittances powered by stablecoins. And so they have this incredibly fast-growing remittance app, and stablecoins are a big part of how they've managed to build such a low friction and compelling product offering. So anyway, that's what is currently working really well in stablecoins, a lot of kind of this cross-border international stuff. But we think there'll be a bit of a WhatsApp effect, where WhatsApp conquered the United States from the outside in. It started as an international phenomenon because people did not have free SMS in many countries, and so WhatsApp became really popular. And then people in the US who had friends outside of the country, or immigrants, or cosmopolitan folks would use it. And now it's become quite popular within the US. But again, it was this outside-in adoption story. We think something very similar is likely to happen with crypto and stablecoins, where it starts for these cross-border use cases, but then that gets the flywheel going and gets people familiar with the product, and they have money in a wallet or something like that. And then you start to see more regular adoption of just using it to power a fintech app, or to send money on a peer-to-peer basis or something like that.
When does the WhatsApp effect happen?
Over the coming few years.
Okay. So you told us you were talking to banks about stablecoins. Can you tell us any more about the progress of those conversations in terms of them working with you on this?
I think banks were much more skeptical of stablecoins 5 or 10 years ago, and now you're seeing much more embrace. I think it helps that things like, the term tokenized deposits you'll hear, which is kind of a related but separate concept, it seems like banks are starting to have some success with. And so, Jamie Dimon was, one of the, most quotable, famous Bitcoin bears. And, if you Google, he has these millions, he's just like extremely colorful and quotable in general, but he's got a bunch of fabulous, quotes about how, terrible Bitcoin is in all sorts of various ways. And now, they're having a lot of success with tokenized deposits. And so I think the bank posture towards stablecoins is really changing.
You gave me the perfect segue, so thank you. Jamie Dimon recently said that Chase will continue to spend what's needed to compete with companies like Stripe, said Stripe by name. Does that worry you? Does that get you worked up at all?
Look, last time I checked, Jamie Dimon runs the largest and most successful bank in the United States with an $800 billion market cap, so Chase will be fine. And also, just, you don't have to win every market, Like, Stripe, does well in payments, and we do lots of other things, and, we're continuing to expand. JP Morgan does well in all sorts of different, lines of banking. We have great partnerships with them across a whole bunch of different products. So, I don't know, people love to get into the WWE aspect of it, where, people are kind of throwing verbal punches at each other. But, I have a huge fondness for Jamie. We work with JP Morgan a bunch. We nibble and compete around the edges, and both businesses are doing just fine.
Well, I believe his exact words were, "We are going to stay out front, so help us God."
That sounds like Jamie.
Well, I think, and you have so many partners, but also pseudo competitors. There's JP Morgan, there's Apple, there's Visa and MasterCard. Like, with Apple, it's been really interesting. They just, sort of pushed Goldman out of their partnership. Now they're working more with JP Morgan. Like, do you have any concerns that Apple increasingly wants more of the stack and that they become more of the enemy part of the frenemy?
Okay, so here's the thing about our space. Payments, by their nature, tautologically, involve two parties. Generally many more than two parties, but at least two parties in that, the transaction from one side to the other side. And so you always have tons of folks where you are partnering with them and maybe competing with them in some areas, and you have kind of productive ways to work together. That is like the name of the game in our industry. And so, like I said, JP Morgan we compete with. They have a payments business. It's more of a legacy business. I don't think it's losing share, and we are doing very well within the payments side of things. But then there's a whole bunch of other areas where we kind of successfully partner with them. With Apple, we have a great partnership with Apple Pay because again, we want to lower friction and allow more digital transactions. And so Apple Pay is a modality that's like so low friction that it allows new kinds of digital transactions to happen. Have you guys ever had the experience of, now sometimes when you go to a restaurant, they maybe have some like digital order ahead, this also ties to labor market and everything like that, but you order at the table, you scan a QR code, and then you just like do Apple Pay, and that's it. It takes like a few clicks. That kind of wouldn't work without Apple Pay because you're there like filling in your payment details and get an error and something like that. It's like, okay, come on, let's get a server over here. That kind of experience can only work if you have something low friction like and ubiquitous like Apple Pay. And so as a result, for us, Apple Pay is amazing because it's lowering the friction for e-commerce transactions, and it's leading to kind of many more of those happening. And so we have a fabulous partnership with Apple on that kind of stuff. Same with Google and all these people. And so there's lots of different parts of the value chain, but in general, we are looking to grow the GDP of the internet. We love when people kind of contribute to that idea.
Okay. You've been really vocal about European tech regulation, and I'm curious, you just recently wrote a big piece about this. I'm curious if at this point you believe the dream of a European tech giant is unrealistic.
No, I think there's lots of good progress, and even in the latest AI revolution, you have a bunch of really successful European breakouts like Mistral, like Lovable. There's a whole bunch of companies, we see in the data, lots of successful European companies. I think the other thing that's helpful within the European AI and tech space right now is that I think the dialogue has really shifted, and in particular around European competitiveness. And if you were talking about the problems of European over-regulation and the bureaucracy with especially the EU a few years ago, you'd have to do a kind of sotto voce, and you're having you're kind of spreading samizdat illegal thoughts. And now, the Draghi report came out recently and said just that and put it front and center, and I think received a lot of praise for laying out some of the problems. And we had President von der Leyen here today talking about EU Inc. and this 28th regime idea, the 27 EU member states, the 28th being kind of a standard where it could be easy to then incorporate a company. And so for me, the healthiest thing that has happened is how the narrative has shifted and people have accepted that there really was a phase of complete overregulation and a lack of standards where, as an EU company, you were still subject to way too many differences across national regimes. I think that narrative has really shifted.
Okay. Now, as I said earlier, I know you like to think in decades, and you and Patrick, your brother, have made a decision to stay private for the foreseeable future. Of course, everyone wants to know if that's ever going to change. Has there been anything recently that has made you reopen the debate internally between the two of you about whether or not this is still a good idea and why?
We are still not in any rush. And, we used to say that, we said that
I know,
well, 10 years ago. I've been
interviewing you for 10 years.
Yeah,
so yes,
exactly. So, but now maybe you're kind of somewhat convinced. No, look, it's very early for us, where we genuinely, it is the fastest moving time in our industry that I have felt, period, since we started Stripe. Because we have, a lot that we're doing just generally with Stripe, to serve startups, to serve enterprises all across the gamut. And then you have AI and agentic commerce coming, where we think it is a transformation on the same scale of, commerce moving from brick and mortar to the internet. It's going to be a similar level of transformation where you have people going from kind of directly interacting with websites and apps to doing stuff agentically. And then you have crypto and stablecoins, again, finally starting to work. And we've been tracking crypto the entire time we've been building Stripe. We started Stripe in 2009. The Bitcoin white paper was released in 2008. So these two phenomena have grown up together with similar ideas around making internet money movement easier, and then very different approaches. We've wanted crypto stuff to work for the longest time. And this is the first time that we're seeing really significant adoption of, especially with stablecoins. So we have tons of product transformation, product investment to do, and the cap table of a company does not change the intrinsic value of the business. And so we're just focused on growing the business.
You and I were talking about backstage about just how crazy this time is in tech and how it just feels crazier than it's ever felt before. How do you see the sort of hierarchy in Silicon Valley and globally changing as a result of the moment that we're in right now?
That's a good question. I don't know is the honest answer. I think obviously the really interesting thing that's happening is, one, how quickly AI companies have built very large, successful products. And so it was just a much shorter emergence of the phenomenon than, say, previous waves like social media. The time required from ChatGPT to go from a brand new product to hundreds of millions of active users was much shorter than any of the previous tech waves. And so I think partly people are still getting to grips with all that stuff. And the second thing is there are, I don't talk to any businesses that don't think AI is a big deal and aren't trying to adopt it within their businesses. And so it's going to be a very rapidly deployed and widely deployed technology. And I'm just curious to see the effects of that. I think we're in the early innings.
How concerned are you about the social issues in society sort of metabolizing all of this change?
I am long-term very optimistic, where I think we've just figured out many tricky things over the years. I'm not saying it won't be bumpy, but
sharing the planet with non-human intelligence that's
exactly
for the very first time ever.
I trust that we will figure it out, but there will be some figuring out that happens.
What are your AI habits? How do you use AI throughout your day? What are you obsessed with? What do you avoid?
Just voraciously back and forthing with the AI apps, be it ChatGPT or Gemini or whatever your favorite app is. I think the information discovery patterns have really changed. I think the other shoe that's about to drop, again, you saw a lot of this enthusiasm for people using Claude Code, is personalized software. And again, we feel like there will be a huge boom in personal software when you can just ask the machine to not only retrieve you an answer, but build you the software that you need. We came from a world of everyone using identical software that engineers wrote and then deployed very widely, and the world will look different when everyone has their own personalized software that was concocted according to their specifications.